Hello everyone. In this video, we will learn how to use Bollinger Bands in the direction of the trend. Bollinger Bands are a type of moving average indicator that generally show dynamic support and resistance levels by moving in a way that indicates potential reversals in price direction. They consist of upper and lower lines and are displayed with default settings of +2 and -2 standard deviation levels. A 20-period moving average line, known as the pivot line, passes through the middle of these two lines. Some traders use the pivot line, while others do not, as Bollinger Bands can be the basis for various strategies. In this video, we will explore how to potentially profit in the direction of the trend by stacking two different Bollinger Bands on top of each other. Before we dive into the indicator settings, I kindly ask you to subscribe to the channel, hit the like button, and share this video with those around you who are interested in gaining profits from financial assets. This way, with your help, I can share the experience I have accumulated over the years with a broader audience and contribute to increasing their capital by providing education to a larger group. Furthermore, I invite you to join my Telegram channel. If the channel reaches a sufficient number of subscribers soon, where you can receive short-term, high-quality signals. Once we reach the required number of members, the channel will go into private mode, and new members will be accepted through a referral system. You can find the invitation link in the description section. Now, let's move on to the indicator settings and put our strategy into action. Let's get started. Let's look at our first example. We start with the short position example. First of all, one of the candlesticks in white color should close between both Bollinger Bands. As you can see here, if the price is closing between Bollinger Bands in a row, we can think that the price has been manipulated upwards. Briefly, the price rises in a negative divergence. Later in the video, we will see our strategy by adding an important indicator, but first, let's learn the basics of the strategy. Secondly, we are waiting for a bearish candlestick to close between the Bollinger Bands, and we are currently seeing such a formation on the screen. Two different entry methods can be used at the trader's preference. First choice. As you can see on the screen, a support line is drawn at the bottom of the candlestick that closes between the Bollinger Bands, and the transaction is entered with the closing of the first candlestick that crosses the support line downwards. Or, as you can see here, a valid pullback is expected and then a short position can be opened with the engulfing candle formation. This is a preference. And again, at the trader's preference, the stop-loss level can be placed above the near or far line of the Bollinger Bands. And the price dropped by about 4.5%. We have achieved a great profit rate for traders who have traded short positions. Please do not forget, in order to minimize the risk, if you achieve a profit ratio of 1:1, 1.5 or at most 1:2, you should definitely bring the cut-loss level to the price you entered the trade. In this way, you will not lose your profit in case of sudden reverse movement of the market. Now let's look at the example of a long position. First of all, we expect a red candlestick to close between the two Bollinger Band lines. Then we want to see a candlestick closing between the two Bollinger Bands, and with the closing of this candlestick, we draw a resistance line at the top. The first white candlestick, which closes by crossing the resistance line we have drawn, can be used to enter the transaction. Or, a valid retracement can be expected after the resistance line is broken and then traded in case of engulfing candle formation. And here was the weak but still engulfing candle formation. The trade can be opened by adhering to our strategy rule. Also, the stop-loss levels can be positioned below both of the lower Bollinger Band lines. Looking at the data, we've achieved a favorable profit rate of 2.5%. To ensure the success of a transaction, it's crucial to exercise patience and wait for all the necessary conditions to align. Acting hastily in this process can significantly lower the likelihood of a successful transaction. If such impulsive behavior becomes a habit for the trader, it will inevitably lead to bankruptcy over time. As you can see in this example, the moving average lines and histogram of the MACD indicator are moving down while the price continues to rise and reaches new highs. Here, the first signal for the short position is formed, but the conditions for entering the trade have not been completed yet. Of course, we also see that a white bar closes between two Bollinger Bands. This is our second confirmation. We see that the candlesticks persistently close inside the Bollinger Bands, but the price is in a motion close to the horizontal. As a result, the probability of a downward trend increases. After a few candlesticks, a red candlestick closed between the Bollinger Bands. We draw a support line from the lower level of this bar and wait for it to break. The last red candlestick you see is suitable for an aggressive trading entry. Very weak but valid pullback. And finally, an engulfing candle formation is formed. With the closing of the last red candlestick, a favorable opportunity has arisen for traders awaiting confirmation. There was an excellent profit for traders who opened sell-side trades. The price fell by 4.7%. Dear friends, not all the terms of this strategy meet often, but when all the conditions come together it creates a very strong signal. I would especially like to point out that it is a strategy with a very high profit rate. Finally, let's look at an example of a long position. Although there is no clear dissonance in the histogram of the MACD indicator, the moving average lines of the indicator create upside lower levels, while the price moves slightly down. There is a positive dissonance here. After detecting the divergence, a red candlestick should close between the Bollinger Bands and we can see it here. In the next step, a white candlestick should close inside the upper channel of the Bollinger Bands. And exactly 35 bars later, a white candlestick closed inside the upper channel of the Bollinger Bands. Now we draw a resistance line from the upper level of this candlestick and wait for it to break. With the upward crossing of the resistance line directly, a suitable candlestick was formed for traders who prefer to enter the trade. One more condition must be met for traders awaiting confirmation. And a valid pullback was formed after a candlestick above the resistance line. Engulfing candle formation has also occurred for traders who are waiting, and now all conditions have been met for traders who want to enter a safer transaction. And we can see that this trade extends up to 2.5% levels. Of course, keep in mind that on all trades it is necessary to place the stop-loss level behind the first or second lines of the Bollinger Bands. I think you are convinced of how strong the trading strategy produces signals. I am sure that this strategy will benefit you greatly if you set up your risk management correctly. I still see people watching there without subscribing. What are we doing? We subscribe immediately and do not forget to press the like button if you like the videos. Best regards, goodbye.